Hello and welcome to the current edition of the Week in Focus. Nothing is certain under Donald Trump, not even the dollar. The dollar has come under pressure on the currency markets and has lost ground around 7% against the other major currencies since the beginning of the year. US government's policies are obviously undermining the strong dollar. We see several risks for the US currency. Firstly, the growth advantage of the American economy is being called into question. Tariffs will fuel inflation in the US while they might dampen it in most other countries. This means that the Fed will be less able than other central banks to offset the negative effects of tariff policy on the US economy. Secondly, Trump's aggressive policy is causing some investors to doubt that US government bonds are still a safe haven. If this view gains further ground, it would reduce the attractiveness of Treasury securities and might make financing the high government deficits more expensive. Thirdly, there is a certain threat to the dollar status of the world's reserve currency. If the tariffs do not have the desired effect and Trump resorts to sanctions, more and more countries would start looking for alternatives, even if this would involve considerable costs. Fourthly, concerns about the independence of the Federal Reserve have intensified. A politicized monetary policy would further undermine the attractiveness of the dollar. We do not currently expect these four risks to materialize in full. The Fed should be able to defend its independence. We therefore do not expect the dollar to weaken significantly further. The euro-dollar exchange rate is unlikely to rise significantly above 1.15 this year. A slight recovery is even possible in the coming weeks.